Oh, let's get ready for Monday Mortgage Minute with your hosts, Tom McNamara and Bruce Woodburn.
All right. Good morning.
Hello, Bruce. Good morning.
Hey, today we're going to talk about reverse mortgages for all of you folks that may be considering it. Even if it's not for you, maybe it's for a family member. Maybe you've heard some real negative things about it. Maybe you've heard positive things about it, but I want to take 15 minutes to just dispel some myths and determine who it's right for and who it's not right for.
Yeah. I can tell you that as a real estate agent, I usually only see the negative impacts of reverse mortgages. And it's not because they're all bad, but it's because the negative impacts impact the heirs when mom or dad or whoever pass and you end up inheriting the house because you've got a time clock ticking over the top of your head.
So let's just nail that down then. First of all, let's find out who it's right for, and then we'll get into some drawbacks that maybe and some benefits for it. So who is it really right for? First of all, you really need to be 62 or older. And the older you are, the more beneficial it is. So if you're in your early 60s, you just turned 62, you may not be able to tap into as much, and it may cost you more. If you were in your 70s, it would cost you much less and maybe more of an advantage. You should always have at least 50%, if not 55% in equity in the property. You can't get a loan if you only have 40% in equity. It won't work. And you can do it as a refinance or you can do it as a purchase transaction. Either way, it can work. Now, it's beneficial for the people that may not really have a lot of money to survive on, but they have a lot of equity. So you take somebody that's 75 years old, they're living off $1,500 a month in Social Security, but yet they've got $400,000 in equity in their property. That person needs some help. So this would eliminate mortgage payments. The only payments they'd have to make would be on the taxes and the insurance on the property. They'd have no mortgage payments, and they could tap into a line of credit, or they could have monthly installments, or they could take a lump sum. Now, if you have one person that's of age, say I've got that the husband is 75 years old, the wife is 70.
Okay.
I would advise that you take out, while that 75-year-old man is alive, you take out all the money and equity out of it because it doesn't have to be repaid. Now, if that wife was not of age, like not even 62, the mortgage does not have to be repaid. She can continue on with it, but the line of credit would be frozen.
Oh, interesting. Okay.
Yeah. So now here's who I don't like it for. And those that follow me on my radio shows and podcasts, you know, I have not been a big fan of reverse mortgages, but that doesn't mean it's not right for some. So if you've got a substantial IRA, 401k, you have plenty of money to live off of for the rest of your life, it may not be necessary for you. You might just pay your house off, pay your taxes and insurance. You never have a payment. But those that want to tap into the equity in their property, it makes it worthwhile. So if you've got a lot of assets and you don't need it, it's not important. It may not be right for you. However, I've still seen people that have got substantial net worth that still like it because they don't have a payment any longer. And if they want to tap into money, they can anytime they want to.
Yeah. Okay. I'm going to assume that this is only for a primary residence. You have to live in the house.
That is correct.
Okay. So here's the real question. What if, because this is what happens as we age, right? What if you're a single person living in your home with a reverse mortgage and you have to move into an assisted living facility? What happens then?
Well, you could sell the home and you can, just like you would any other transaction, it's the same. It makes
Can you choose to keep it?
Well, if you need to occupy it, if you're going to keep it, if you're going to keep it, you're supposed to occupy the property. You're not supposed to be living somewhere else. It's not for a vacation home or investment property. So it's really designed for people that are living in the property. If you're going to evacuate the property, you should sell it or convert it to a regular mortgage or pay off the mortgage.
Okay. So let's go back to where I started, because that's been my experience with them so far. And I usually see it at the tail end, right? So I get a seller calling me, they inherited the house, they finally got through probate, 6 to 9 months, maybe even longer, especially if heirs are fighting over who gets what or percentages or did mommy like me better, all those things, right? So they've got a clock because you have 1 year from the date of the decedent, right?
That's right.
Not when you inherit it, but when the deceased passes away. You have 12 months, and then that bank is going after you.
They'll start foreclosure process if you don't pay it off or sell it.
Yeah, and meanwhile, during that time, interest is continuing to accrue, right? And if you go into the foreclosure, they're going to start charging you foreclosure fees, attorney fees, and all kinds of things that rack it up.
These things could be the same, whether it's a reverse mortgage or a forward mortgage or a free and clear property. Listen, here's the way to solve that problem. I'm going to just cut to the chase. Get a will, have a trust, have a ladybird deed. Those are the 3 things that everyone should have, no matter what type of mortgage you have, because it eliminates those problems. The problem that happens is that you have these heirs and they're never going to agree on anything. So if you want to totally destroy your family and you've got adult children that are going to inherit your property and your estate, you will totally screw up that family if you are not prepared in advance. So have a will, have a trust, and have a conversation with the family beforehand so it doesn't get to this, because you and I have seen this time and time again. And it doesn't matter, like I said, whether it's reverse or anything else, it destroys families when you are letting them make the decisions. You make the decisions, and that way it does not have to be decided by the courts.
Yeah, no, it happens, and it happens all the time. I see with the reverse mortgage, and I agree with you that you should have those things, but it seems to me with the reverse mortgage that the problem is you can't choose to make payments. You can't choose to keep the house in the family unless somebody can buy it out. Whereas with the regular mortgage, at least the estate can continue to pay payments. The heirs have a little longer to figure things out, whatever it is. So that's just been my experience with that.
And you know what? That makes sense if we're more concerned about our heirs than we are about ourselves.
Sure. Some of us are and some of us aren't.
Right. And listen, if you cannot solve that problem, then you're not solving it, whether it's a forward or a reverse mortgage. I know that's a problem. The dilemma is that on a reverse, you have 12 months from the deceased person's death in order to get that property paid off, and whether you're selling it, and the heirs can sell it and they can make the profit off of it.
Sure.
Just like any other home, but there is a time limit.
So let's talk about the advantage, because I do see one advantage for seller, for the owner, because they can essentially take out whatever the maximum that they can take out on a reverse mortgage. And then as they don't make payments and they're not paying down anything, so the interest just kind of accrues and accrues and accrues. And at some point, you might owe more than the house is even worth, which is essentially you borrowing more than the house is worth. And when you pass away, your heirs don't inherit that debt, right?
That can happen. I haven't really seen that happen very much. You and I actually have a situation right now where there's very little equity, but a lot of that equity was chewed up for the reasons you cited earlier. There was no will, there was no trust, there was no probate established, and it just went on, and the children did not agree on what should happen, and it's a kerfungle. So let's talk about the idea that we came up with to help this family, because I think this is something that you could do more proactively and save everybody time and money, right? So it happens that one of the heirs is in a better financial position and is able to purchase the house from the estate. And we're going to do, and you called it yesterday, a gift of equity. So explain how that works. If he bought this house on a traditional mortgage, you could use a gift of equity. In his case, we're going to do a DSCR, and you can't do a gift of equity. But what had happened is that the courts deeded the property over to the children. I didn't know that when I got the client. He didn't even know that. I pulled up public records and I said, wait a minute, you can't buy this house. He says, why not? I said, because you already own it. Your name's on the deed. You and your two brothers are on the deed to this property. He goes, you're kidding me. So I had to get with the attorney last night and determine how that happened and why it happened. And that's because the court said, you're running out of time. This is yours now. You take care of it or they're going to foreclose on you. So now we got 3 people own it. 2 of them are in agreement. 1 of them still is on the fence.
Yep.
So yes. But however, now what would happen? The bank's just going to take the property back and foreclose. And there is some equity. There's probably about $40,000 in equity in this property. Not a lot, but there's probably about 40,000. So the one son wants to go ahead and purchase it. I was going to do a gift of equity, but you can't do a gift of equity on a DSCR loan. You can on a traditional mortgage, but finding out now that he actually already owns it, now I'm going to do a refinance DSCR, no cash out refi.
Okay. All right. So things have changed even since I talked to you yesterday.
Absolutely. Right? Yeah. It's like the world turns. We're living in a soap opera over here, and every day we discover new information.
That's fun. That's fun. But let's talk about a gift of equity, because how would that work if it could work,
let's say we have a $400,000 house and there's $200,000 owed on it. And the heirs may say, hey, I want $50,000 for 2 of my brothers and sisters. So there owes 200 on it, but they want 50 apiece. So now we owe 300. That $400,000 house is purchased, and that one brother gets $100,000 gift of equity and gives the other 2 brothers their 50,000 each.
So that's awesome. So if it worked out that one of the siblings wanted to benefit from the house, maybe they're local and the other 2 are in different states or whatever, they can benefit from some cash, and the one that wants to live in the house can benefit without spending a ton of money, benefit and get into the house themselves.
He could literally, if there's enough equity, in this case, there's not, but if there was enough equity, he could get in for no money out of pocket. We do gifts of equity all the time. It has to be a family member. You cannot give a gift. A seller can't give a gift of equity to just anybody. It has to be a family member, and it is a legitimate gift, but you are basically gifting them the equity in the property. And what you want to do with a gift of equity is you want to sell the property for market value.
Yes.
Not reduced value. And the reason for that, if I would have reduced it so the buyer was only buying it for $350, then he would be subject to paying private mortgage insurance. And that just is an extra expense. So bump the price up and give them more of a gift of equity.
Yeah, it's interesting. That logically feels counterintuitive, right? Because it would be like, oh, I'm not going to pay full market value. I should just get a discount because it's my mom that I'm buying it from. But really,
everybody thinks that. Don't do it that way.
Yeah. See, and this is the reason. There's a lot of reasons, but this is the reason that I always want to make sure that everybody that I'm working with talks to a mortgage professional that knows what the frick they're doing, because there's so many out there that don't know what they're doing and they get their buyers or sellers into trouble. Same with agents. Plenty of agents that don't know what they're doing.
It's in every industry. There's incompetence everywhere. And listen, here's the thing. I think reverse mortgages specifically are a very specialized product. So I have my own department that just does reverse mortgages. So I don't have my other loan officers and other assistants interfering with that. I want the people that know it inside and out, so there is no mistakes. If you're looking for a reverse mortgage, talk to me. We'll analyze it. If it works for you, if it's the right thing, we'll help you. If it's not, I'll be the first guy to tell you.
Fantastic. Bruce,
we are up
on our time, man.
Everything you need to know about reverse mortgages so you don't look stupid. Have a great week.
You as well.